Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name's Patrick Smillie. I'm the editor at BusinessDesk, and today on Shared Lunch, we're joined by the CEO of Air New Zealand, Greg Foran. But before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Greg.
Hi there. How are you, Patrick?
Good to see you.
Likewise.
You've reported probably the first decent earnings report since you started at Air New Zealand. It's not your fault, obviously. Do you want to run us through some of the highlights, and then we'll get into it a bit and pick some of it apart?
Yeah, sure. Look, it is nice to be back in the black, standing on your own 2 feet. And, I think we lost 1.2 billion the last couple of years. So to come in with, 585 EBIT was good. Good to see the revenue strength as it was. But I would also say that, we had plenty of tailwinds. And the result exceeded our expectations. And you can see that with some of the disclosures we had to do during the year. Demand came back better than what we expected. We're a bit short on supply, like most airlines. That drove pricing up. And then the other benefit was that fuel changed a lot, particularly in the back half of the year. So good result, but keep our feet on the ground. And it's a pretty volatile industry, as we both know. Yeah.
I mean, you described the year as unique. Quite apart from the fact that it was obviously a return to normality after an equally unique period of complete close down, really.
Yeah.
How would you describe it in terms of how we should think about the next sort of 2 or 3 years? So it almost looks like a sort of almost like an artificial high point.
Yeah, it could be. We deliberately haven't given any guidance. It's still reasonably hard to read, but I often sort of characterise our performance at the moment, Patrick, as 3 acts. Act 1 was survive COVID. Act 2 was enjoy the recovery. And Act 3, which is likely to be longer lasting, is sustain the performance into headwinds. And, some of those headwinds are reasonably short term. Some of them will be medium and some will be long term. An example of a long term one's going to be sustainability. How that plays out in airlines is going to be interesting. Medium term, I think we're seeing the challenges of stagflation in a way that I think most countries have not experienced before. Inflation is a hard one to get your head around, and then, the productivity challenges around that make this one quite difficult. Shorter term, it'll be interesting to see how the New Zealand economy fares, particularly post-election. So is demand going to hold up, or is disposable income going to see some falling off? I'd say at this stage we're pretty happy with how we're tracking, but as I'll repeat what I said before, it can be pretty volatile in this game.
Yeah. I mean, if you were to reel off, what are the things which you get up in the morning and think about having to hit, and how do those metrics look against in 23 just finished? What are the sort of the big things which you're happy with, and the things which we should be looking at and saying, okay, well, if that either has to get better or hasn't yet turned? Is there anything in the hasn't yet turned?
Yeah, the first thing that comes to mind, Patrick, is being good at the brilliant basics. It's running the airline like a Swiss watch. Planes leave on time, they arrive on time. We don't leave anything or lose anything in between. And that's really important, and it's important not just for customers, but it's important for shareholders too, because that drives efficiency, it drives cost, drives customer engagement. So it's about brilliant basics, and I would say that we are day by day getting our swing back, our rhythm, and we're getting better at it. We're dependent on many other people in the environment as well, like aviation security, MPI, other airlines with connecting flights, airports. So it's not just us alone, but I would say that we are well on the track, and our performance would indicate that we are ahead of where we were pre-COVID. but we don't want to stop there. We want to be even better. Number two, engagement of customers and staff. So, I'm a believer that culture trumps strategy for breakfast. So let's make sure that we have an incredibly engaged team of Air New Zealanders looking after our customers, and we're doing the sort of things that matter to customers. And those things could be, improving the day of travel app, making sure that lost baggage is a world-class experience. It will happen. We don't want it to happen, but when it does, let's make sure that we're world-class at recovering. Let's make sure that our staff have the tools to do their job, and increasingly we're digitising out aspects of the airline to bring that to light. So, that's a couple of things that are top of mind. And then, of course, you've always got to be ready for the next side swipe in our business, and that could be, challenges with fleet. Some of those could be more longer term around things that are happening with Boeing and Rolls-Royce or Airbus. Some of them could be short term, and they could be as simple as a catering truck nudging a plane, and suddenly I'm down a wide-bodied for a few weeks.
Look, should we just dig into the numbers a wee bit? I guess the thing as an investor, which I would find interesting to understand, is what was the process that you went through, and what's the strategic rationale behind what I described in BusinessDesk, but you may not agree with my characterisation, as basically a more aggressive balance sheet settings than we're used to having seen in New Zealand in the past. And perhaps take us through what those dividend ratios and debt ratios mean in terms of the airline going forward.
Yeah, I would characterise it more along the lines of not really being more aggressive, but sort of getting in lockstep with what we're seeing in other airlines. So, the dividend payout ratio we think makes sense. We had a look at every other airline around the place. We did work with some external groups to help do that benchmarking. We think that payout ratio makes sense. The change, of gearing to debt to EBITDA is frankly just reflective once again of what we see elsewhere in the industry. It actually ends up with a slightly wider range. That's not really the reason for doing it. It's just a better comparison measure. It's also one that credit agencies use. So, it was simply just updating that. As I said, we benchmarked many other airlines. We took a look at it and we said, now's a good time to get ourselves a little bit more in sync.
Yeah. I mean, was the way things were set up just old-fashioned, or what are those? Help an investor to think about what those ratios actually mean.
Patrick, that's probably a better question for our CFO to get into those details, to be honest with you. As I said, the change from gearing to debt to EBITDA just gives you a little bit more flexibility on that, but most companies are running that. The dividend payout ratio, once again, we had a look at a bunch of airlines. So, it wasn't about anything significant other than we hadn't looked at that for a while. It was appropriate to do it at this point in time, and we are now more aligned with what we're seeing with our industry peers.
I guess what I found was it made it a little bit easier to understand where your points of flex might be, either in your cash flow or in the balance sheet as you move beyond 2028. I mean, I think one of the questions, well, I've got two questions really. There seemed to be an implication there that you might be in a position to either look at share buybacks or some other forms of capital return, because you've got yourself sorted for capital needs until 28. Yep. But so there's the first question, and the second really is how do we think about post 28?
Yeah, so there's no doubt that part of the work that we undertook there for that sort of almost 2.5 years was to do exactly that, get the balance sheet in a position that we knew would make a lot of sense. The reality over last year is that we've performed way ahead of what we expected, so we've got plenty of liquidity there. We're not going to go rushing in and doing anything at this stage. We've shared with the market what the metrics are. We'll see liquidity come down sensibly over the next sort of 18 to 24 months. And there's ways that will come down. That could see us, for example, use our cash to purchase the next 2 domestic A321s. It could be a variety of other things that we could do. So, we're in a good position, holding plenty of cash at the moment. We will get that ratio gradually into line. We feel good about the amount of equity that we've got, but it's too early for us to be talking about what we might do in terms of dividends and share buybacks. But suffice to say, all of those are on the table. And as the year unfolds, we've now got the right capital management structure in place that allows us to do those things. We thought it was appropriate to do the special dividend, and that's what it is, a special dividend at the end of this year. But we'll assess what we'll do at the half and what we'll do at the year end as we get a bit further into this. Yeah, 2028, I would say to you that we're spending quite a bit of capital right at the moment, combination of more fleet changes that sees fundamentally us end up with a single type in the wide-bodied fleet, which is the 787 Dreamliner, as we continue to retire 777s in due course. We don't see massive fleet expenditure out past 2028. There's obviously be some changes, but it's not until you sort of get into the 2030s and we have to deal with the older turboprops, the Q300s, the smallest one. We're pretty happy with the ATR 600s, but we've got 21 or so of the Q300s, and our thinking there, still very early, is will we have a sort of hybrid engine replacement for those, or is it a green hydrogen electric plane? All of those are things that are in play at the moment, but nothing is available commercially on the market. But maybe by 2032 there might be. Good thing about those is they're a bit smaller and probably cost a little bit less, but that's sort of what we've got in CapEx, to be honest. We'll have the hangar fixed by then and various other things.
I mean, I guess I found myself, because you reported on the same day as Qantas. So Qantas, flashy Australians, they've got 787s out to the crack of doom, it seems.
Yeah.
They're ordering planes into the late 2030s. It almost, tell me if I'm wrong, but it almost sounds as if you're more focused on upgrading and replacement of the domestic fleet in the 2030s than necessarily expanding the fleet or trying to go bigger in long haul in the next decade.
I think that is actually a pretty fair characterisation, and the only other bit I would add is that Qantas's fleet is double the age of ours. So, their return on invested capital looks good because they're running plenty of old planes as well as delivering high profits. So they've been putting off fleet replacement for many years. Air New Zealand hasn't. Right. It got into Dreamliners early. It got out of the 767s and the 747s, and we've had 777s, and then we've introduced Dreamliners, and now, we'll get out of the 777s and just leave ourselves with the Dreamliners. And that makes sense. We're not a massive airline, and, somewhere around 24, 25 wide bodies feels about the right size for us. Going deep into North America feels good for us. We think that's a good market. Being sensible about how far you go north, into Asia. We like having the relationship we do with Singapore. Hong Kong still makes sense. Shanghai is good for us. Japan. But we don't have a list of another, 10 places that we want to get to, primarily because we don't think that is the right long-term strategy for the business.
Interesting. So is it possible to imagine then that by the end of the 2020s, do you have a little sweet spot where the airline runs on a pretty new fleet, with the exception of the smaller planes, but your domestic planes you can probably change out. You think about them a little bit differently. Yep. We've done all the capital spend, and you actually maybe can sweat those for a year or two and make some quite serious money as long as the conditions are right.
Look, our strategy says grow domestic, and boy, doesn't that make sense? You got 85% market share. We've got a good product. We've got a great brand. We've got ourselves through COVID. We've got a nice balance sheet. And let's make sure that we do a terrific job at our core, which is connecting Kiwis with one another. So we do see growth in domestic, but sensible growth. And in international, it's about optimising. It's about finding, as you said, that sweet spot and then going deep into that sweet spot. Don't expand yourself too far, too wide. Those wide-body planes are very high in terms of cost to operate and run, and you want to be operating where you have competitive advantage. So, yeah, I do see a really good future for Air New Zealand. I think it's positioning itself very nicely.
I think when I first met you about 3 years ago and you first had your feet under the table, you described the business as being cut up into three pieces, a third, a third, a third. Third domestic, a third Trans-Tasman and Pacific, and a third long haul. Is that what it looks like 5 years, 10 years out?
Yeah, probably. So, and if you said, so how do you feel about each of those thirds? I've spoken about domestic. The third Tasman Pacific Island I'd put into a game of two halves. The Tasman can either be very good, which it has been recently because Virgin isn't on it and there's not as much capacity. The Pacific Islands is a great business for us, a bit like domestic. So Tasman or mid-haul you can sort of put into two other buckets, and long haul is the other third, and we feel comfortable with where the sweet spot for that is.
In terms of the domestic market, one of the things you presumably have to think about pretty hard is that you can do the basics brilliantly, but you're also charging people something like a third more than you were before COVID. What's the elasticity like? What's people's tolerance for airfares as they currently are, you think?
Well, we're reasonably happy with the demand that we're seeing at the moment, would be the first comment. The second comment is I am acutely aware, and I guess some of this goes back to my 40 years as a shopkeeper, that you can't get too far away from the discounter in terms of price. So, if Woolworths / Countdown or even New World, which is part of the foodstuffs family, if the price gap between those brands is too significant to pack and save, then you lose market share. And so I'm very cognizant that as we look at Jetstar, making sure that we've got enough seats comparably priced, taking into account that we've got a better schedule, we've got lounges, all that sort of stuff, is critical. So we've got to maintain that balance appropriately. And the third comment I'd make is that none of us are immune to cost increases at the moment. And they're coming at us pretty hard and fast in the aviation industry, not just in New Zealand, but all around the world. I had one last week where we're paying 50% more to an overseas airport in order to land there. Not 5% more, 50% more. Baggage handling out of ports is going up. Auckland Airport itself is going to be a reasonably significant cost increase for us just in the next 5 years. If you go out beyond that, it's a really significant cost increase. So I think we will see prices staying higher than what they were pre-COVID. I've said publicly I don't see them going back, and that's because some of those costs stay. We can get more productive, but we can't get so productive that they'll go back. We've got to be cognizant of price, and we've got to make sure we deliver a great product.
There's an interesting comment from Auckland Airport themselves, who felt that you're doing some pretty interesting load management in the sense that they were seeing Air New Zealand planes spending less time on the ground in Auckland, which I gather that every minute you spend there, you pay them some sort of rent. Has that been part of what you've done, or are we just getting better at this sort of thing?
To be honest, it plays into the brilliant basics. The simple answer to that is a plane doesn't really make any money while it's sitting on the ground. They need to be in the air. Our utilisation of aircraft has been actually very impressive during this last period. Our wide bodies can be flying 16, 17 hours a day. And when I talk to my peers around the world, they are actually really impressed with that number. And it's about us making sure that we build tight schedules, not so tight that we can't execute them, but what you do is you get a bit of return on your asset when it's out there and it's full of passengers. So that's what's driving it.
Yeah. You're talking about aviation fuel, about what, US $105 is the assumed average over the next year. Talk to me about what's possible with a little bit of sustainable aviation fuel and how you think about SAF in 5 to 10 years' time, because I have to say I'm a skeptic. It seems like something we have to do if we can, but where's it all going to come from? And what's it going to cost?
First of all, in terms of fuel, of course, what we're seeing an increasing spread in what they call the crack. So, the refining margin from taking a barrel of oil and turning it into kerosene that we use in the plane. We started the year and built a plan at around $89, $90 a barrel for the kerosene. I think this morning it was 115. I think earlier on this week it was 121. So this price moves around a bit. Now, this time last year it was about 140, and then it dropped down to just under 90. Every dollar that moves, Patrick, is about 12 million off our bottom line if we can't pass it on.
Right.
And when the fares are high, which they are relative to 2019, you've got to be careful about trying to pass on things when they're already on a high base. So, that's one of the reasons that, I am optimistic, but we need to be just sensible about some of the costs that we incur. In terms of SAF is about 4 times more expensive than kerosene. So it's not, 20% more expensive or 30%, it's 400% more expensive. And the reality is that it's not produced in large quantities. It really started to come into commercial production 2016 or so. There's more plants producing it now, but not in significant numbers. And for us trying to procure it in a way that we are very happy with the provenance of the product, in other words, we know that it is the real deal, makes it even more difficult. So, we put a marker down to say we want 1% of our fuel to be sustainable aviation fuel. And we're not going to be able to hit that, or we didn't hit that target, simply because we couldn't actually find product that we could buy. Now, the market will be the market, and that's a good thing. So there's plenty of plants getting produced all around the world. Are they going to be able to produce it in enough numbers to get that price to come down so that it works? That's a difficult thing for me to speculate on at this stage. However, we know that it is a critical part of our decarbonisation. And we can do what we want to with electric planes, and we will work hard on green hydrogen electric planes, and we will. But the real solution is some type of either eSAF or, a biomass sustainable aviation fuel. We're doing a study at the moment with MB. I'm guessing that'll take the best part of a year to see whether there is an opportunity to build a plant here in New Zealand, maybe using woody biomass or, household refuge, etc. So work underway.
I suppose the thing that I wonder about, and both in the context of sustainable aviation fuel, the desire for or concern about climate change, certainly being at top of mind for people when they asked what they're concerned about, even though they probably still jump on planes anyway, is, are you seeing any, or do you expect any kind of fundamental change in who flies, how far they fly, and what they expect of an airline, because I think that's one of the things you've talked about, is that Air New Zealand at a great distance is going to be challenged for long haul if people start to get flight guilt. And I don't think it sounds as if it's terribly likely that sustainable aviation fuel is going to be enough of an answer to overcome that.
Yeah. I guess the way I sort of feel about that is common sense tends to play out increasingly in this area, doesn't it? You know, if you're living in Europe, you can find an alternative way to get around. A bit harder in Australia and even New Zealand to find ways to get from A to B unless you jump on a plane quickly. No high-speed rail, roads aren't quite so good. 2,000 kilometres from Auckland doesn't even get you to Australia. 2,000 kilometres in the middle of Germany gets you to Moscow and all the way down to Turkey and over to Ireland. So geography plays a point. I would suggest to you that what we've seen as the world has opened up, that business travel hasn't returned quite to the same extent that it used to. How much of that is work from anywhere, come Zoom meetings, come businesses looking to save money that they have saved during lockdowns that they don't want to put back into travel budgets, and companies having broader carbon emission goals? I'm not sure, but there's a combination of all those things that says probably, particularly for some of the large corporates, you're travelling a bit less because it suits. There are alternatives. So I think there's a whole bunch of factors at play here, and I'm guessing it certainly is a headwind, not a tailwind. How much of a headwind, yet to be determined. I don't think it's ridiculous at this point, a ridiculously difficult headwind, but I think it will vary depending on geography. And I think over time, technology will probably come up with a solution.
Tell me what's happening on those North American routes. You've certainly made an early play for them being the big opportunity for Air New Zealand, which perhaps hadn't been prior to COVID. Just looking through some of the analysts' notes, it also appears that North America is probably the most competitive, relatively speaking. So market share for Air New Zealand, even if there's more seats involved, has fallen away a bit. How much competitive pressure are you on those routes?
Well, it moves around a bit, Patrick, to be honest with you. I'd say, first of all, a pretty good tailwind is the strength of the US dollar versus the Kiwi. So, if you're an American at the moment...
Not if you're going out.
It's pretty good coming in. And you often hear them talking about that. It goes a long way. You heard that during FIFA. So, that gives us a good tailwind. There is no doubt that we're going to see more capacity, particularly from November, particularly on a couple of routes. Auckland, LA gets up to 28 flights a week. There's an extra 10,000 seats on that particular route starting in November for a few months. Delta comes in, American's doing more, United's doing more. We're back to about 95% of what we were doing when you take into account that one of those was going all the way through to London. So we're very keen to keep our share up on there. I think one of the things that's causing it is, pre-COVID, there used to be 300 flights between the US and China every week. Today, there's 12. 12 a week. They're doubling it over the next few months to go to 24 a week. That's not from China to the US, that's only US to China. So currently doing 12, used to do 300. So there's probably a few spare planes sitting around at the moment that the Americans are saying, we know China will come back. Some of the geopolitical issues will get solved, but at the moment we might as well throw them on a couple of routes down to New Zealand and Australia. So that'll run its course.
No guidance for the year ahead, and I guess I understand why that is. But you must be able to give us some sense of how at least to think about the next year. Are the biggest issues economic, fuel-based, labour market-based?
Yeah. I would say to you that by and large, as I mentioned, we have our swing back. So the labour is feeling pretty good. We're operating the business, I think, quite effectively. We've got some interesting negotiations coming up. We have 34 collective employment agreements that get negotiated every 2 years, so there's never a shortage of negotiations going on. Some of those will be interesting, but I feel we're in reasonable shape there. Demand, interestingly, is still pretty good. So, it was a bit lighter, particularly during July. FIFA wasn't quite as strong as we thought it would be, so some of the loads were a bit light. We've shared that sort of data. But we've also stimulated the market a bit in the last couple of weeks, and you and I were chatting about pricing probably about 2 to 3 weeks ago over dinner one evening. And I took that on board and we've worked with the team and got a little bit more sharper on our pricing out there, and I was just checking it even today, and I'm quite a bit happier with where a lot of our opening fares are sitting, and we're seeing good demand. So I feel okay about that. Fuel's a tough one. As I said to you, we started the year at 89.90 and it's at 115 today. Got up to 121 last week, and every time that moves by $1, that's 12 million. So it's probably the most difficult one, along with a bit more competition starting to come back into the market. But I'm confident we can compete well.
One of the things I sort of feel I have to ask you is probably a last question. You have a very widely held share amongst small New Zealand shareholders.
Yes,
I think a lot of that is, as much as anything, almost like a sort of a patriotism thing. They know the business, they're proud of it, but there's no escaping the fact that aviation is a difficult industry in which to make serious money. You have great years like the one you just had, but you can have stinkers like the two you had before, even though they're extremely unusual circumstances. How do you factor that into the way that you think about the business as an investment play and how should a New Zealand shareholder think about Air New Zealand as a share?
There is no doubt this is a bit of a unique business. It's not often that you get to work in a business and you can be out there on the front line, and many people will want to stop and tell you about the 51% shareholding they have in the business courtesy of the Crown, or the other many thousands and thousands who do personally own shares in the business. So, we recognise that our responsibility is wide. It's not just that we need to make a return on invested capital. It's also a responsibility to New Zealand Inc., communities in New Zealand, suppliers who supply us, the 11,500 staff we have, and the 18 million people that we move each year. So we recognise that. I would say to you that Air New Zealand, in terms of airline fundamentals, is a great airline. And it's a great airline because it has some natural competitive strengths. It has a great domestic business. It's got 85% market share. We don't take that lightly. It's a good position to be in, and that's a good, profitable business for us. We also have a very good business in the Pacific Islands. We have a good cargo business that uses the underbelly of our planes, and we are very clear on what we want to do with our long-haul business. Last year, we also added 380,000 people to our Airpoints program. Pretty massive, when you consider the scale of New Zealand. I think Qantas said they added 1 million people to their Qantas frequent flyer, and they're 4 times our size. So 380,000 people. So,
how's that going? What can we expect on the loyalty front, both as a customer, but also the return that loyalty can give to the business? I don't feel like we've quite seen the rabbit on that one yet. I know you've been working on things.
Yeah. Well, first of all, we don't share it, we don't separate it out, and we don't have any intention to do that. It's a slightly different program in that we don't have deliberately the same levers to pull that some others do. And that's an advantage for the brand. But you could equally argue, well, gee, we could make more money if we made the currency less transparent. One air point equals $1. That's the deal. You know that, I know that, and over 4 million Airpoints members know that. You don't know the value of a point in almost any other airline that you travel with, and they change the currency. We don't. I think that plays into the strength of the brand. What we have been doing is that we've well down the path of replatforming that system. It's going to allow us in time to introduce a different tier to look at our redemptions. We continue to work with our partners and expand where it makes sense. That will play into how we think about lounges. So we needed to get the replatforming done first. We're about 6 months away, or a bit longer than that, probably 8 months away from having that complete. That's been a big investment. That's about $30 million. But we hadn't spent any money for over 20 years on that, and sort of May next year, we're going to have a state-of-the-art loyalty platform that's going to allow us to do all kinds of interesting things.
You're doing other IT stuff as well, I have to say. Actually,
a lot.
Yeah,
a lot.
So because you've had a bit of a Heath Robinson in the background for a while. How's the kind of the whole upgrade of the stack looking?
Yeah, pretty good actually. So it's not just been the customer-facing things that we've been doing, and people will have seen, the new app that we've got out there, and we're about to turn on baggage tracing for people, and it's a lot faster now and got a lot more capability. We're just actually, as we speak, providing iPads to all our crew. That's going to create a step change in service. We've updated their day of travel app. In the last month, we have rolled out a paperless flight deck. So this concept of having to carry your bag with everything in it, because it's got all your flight plans, actually all that is now digital. And, that's been rolled out. But it's not just those things. We've replaced most of our switches deep in the bowels of the IT system. We're well on the path to getting everything into the cloud. It is a big focus on us. We would like to become the world's leading digital airline. We
have 4 questions, which I think you may be aware of, one of which is extremely cheeky. So from viewers on this, is there a reverse share split an option for Air New Zealand stock?
We would never say no to anything, but we don't have anything on the table at this stage.
Okay. What are your thoughts about the Wellington International Airport expansion plans?
We're keen to operate in really productive and efficient airport environments, and the Wellington ones are underway. I'm pleased that we're doing what we're doing down there, and providing it's done in a very efficient, effective way, then we're very supportive. But it needs to be affordable, because those costs ultimately go on to fares.
There's somebody here who's very keen on the old turquoise colours. Do you think we'll ever get them back?
We don't have a plan at this stage. We're pretty keen on how the planes are looking. We wanted to get them all in the same condition. What we are working on at the moment, which I think is pretty exciting, is a new uniform. So, that I think got changed about 2013, 2014. So we're down the path of picking who we're going to work with, and give it a year or so, and I think we're going to see some wonderful new Air New Zealanders out there.
And finally, from a chancer somewhere in Sharesies land, how many shares do I need to buy before I can get onto the Air New Zealand board?
Are you planning to nominate yourself, Patrick?
I'm not at this stage, but if there's something opening up, just wink.
Yeah. with the Crown being a 51% shareholder, they obviously have some interest in who the directors are, but you don't need to own shares to get on the board, but you do need to nominate yourself several months ahead of time.
Right.
But you'd need to get through a few hurdles to get on. But
Yes.
we're always looking for best-in-class directors.
Right. Well, the Sharesies investors, consider yourselves challenged. Thank you, Greg Foran. Great to talk to you.
Thank you, Patrick. Appreciate all your support.
Thanks for tuning in, everybody. Big thanks to Greg Foran for joining us. We really appreciate your time and your thoughts. We've got a special offer for Sharesies investors from BusinessDesk. If you use the promo code SHAREDLUNCH2023, you'll get $100 off an annual subscription to BusinessDesk, which is usually $349, including GST. The offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Enjoy the rest of your week.